Welcome to The Explainer. Today, we're going to trace a really wild connection, how tensions on the other side of the world could directly shake up the price of a home right here in Canada.
I know, it seems like a bit of a stretch, doesn't it? But stick with me, because there's this surprisingly direct and predictable chain of events that links global instability right to the housing market in your own backyard.
And this quote right here, it really nails the core idea. We're not talking about fear-mongering or wild speculation. Nope, it's about something much more fundamental. A logical, predictable flow of both money and people, all looking for one thing: safety.
All right, let's get into it. First up, let's talk about those first ripples that spread through the global economy the moment things get tense.
So the moment geopolitical risk goes up, markets react. I mean, instantly. You see oil prices jumping all over the place, shipping costs more, central banks suddenly get very cautious about cutting interest rates, and all at once, big money investors start to seriously rethink risk. And that kicks off a really powerful trend. And that trend has a name. It's called the flight to quality. This is super important for everything else we're going to talk about. It's simple, really. When the world feels shaky, safety becomes the #1 priority. So investors pull their money out of anything that looks risky and move it into places they see as stable and secure.
Okay, so during this big flight to quality, where does all that capital, and people too, where do they look to go? Well, a few key countries really stand out from the crowd.
And you guessed it, Canada is consistently at the top of that list. It's not just one thing, it's the whole package, right? You've got a stable G7 economy, a really solid banking system, laws you can actually count on, and a society that, for the most part, gets along. You put all that together, and Canada becomes this absolute magnet when the rest of the world feels chaotic.
Okay, so this is where it stops being just some abstract economic theory and gets really concrete. We're talking about actual people, and we've got the numbers to back it up.
So check this out. According to Global Affairs Canada, there are over 85,000 Canadians officially registered in the Middle East. And here's the thing. Registration is totally voluntary. So the real number? It's probably way higher. And these aren't just individuals. We're talking about established households with deep ties back home.
Now, let's just play out a scenario here. We don't need some huge mass return. What if just a tiny slice of these families, I'm talking like 5, maybe 10%, decide, you know what? It's time to re-anchor back in Canada for a while. The ripple effect from just that small number would be huge.
So what does that look like in real numbers? Well, that 5 to 10% translates to somewhere between 4,000 and 8,500 new households entering the Canadian market. Families looking for a place to live, whether they rent or buy. And if we look at past trends and just basic logistics, it's pretty clear where a lot of them will land. Southern Ontario. I mean, it just makes sense, right? That's where you have the jobs, the country's biggest airport, established communities where they already have connections, and of course, top-tier schools.
Okay, so we've got this potential wave of new demand heading our way. But to really get what that means, we have to look at the housing market they'd be walking into right now.
And let's be clear, the market today is a completely different beast than what we saw just a few years ago. Remember that? The crazy bidding wars, no inventory, that's pretty much over. The market's already gone through its correction. Inventory is way up, new construction has slowed down, and things are much more balanced.
Now, here's the part that might surprise you. A stabilizing market, one that isn't already red hot, is actually way more sensitive to a sudden shock of new demand. And that, right there, is the absolute key to this whole scenario. So, with all that in mind, we can basically game out 3 different scenarios for the housing market, and it all just depends on how things unfold on the world stage.
All right, this table breaks it down nicely. Let's look at scenario A. The conflict fizzles out pretty quickly. If that happens, you get a small increase in people coming back, but nothing crazy. The market just keeps balancing out, and buyers stay in a good spot. Now, scenario B, the conflict drags on. This is what could trigger that wave of thousands of returning Canadian households. They start snapping up the available homes, which basically stops prices from dropping any further. It creates a solid floor. And then there's scenario C. We get some real, lasting de-escalation. In that case, you don't get the shock-driven returnees, but the global stability means mortgage rates can finally come down, which wakes up the local buyers and leads to a more natural recovery.
Okay, so that brings us to the most important question, right? What does all this actually mean for you? Doesn't matter if you're a buyer, a seller, or an investor, there are some really clear takeaways here.
If you're a buyer, listen up.
This could be a really unique window of opportunity. Right now, there's a lot to choose from, and you're not fighting off 10 other people for the same house. It's a chance to be picky and find something great before a new wave of demand could tighten things up again. The key is to think long-term, not try to perfectly time the absolute bottom of the market.
Now for sellers. The good news is there are still buyers out there. The market is moving. But, and this is a big but, buyers are super careful about price. So pricing your home correctly, based on solid, current data, isn't just important, it is everything.
And finally, if you're an investor, the game has changed. This is not about quick flips anymore. It's all about resilience. You want to be looking at income-generating properties. Think family-sized homes, close to transit, in those key markets like Toronto, Mississauga, and Oakville. Those are the kinds of properties that are perfectly positioned to benefit from more people moving to the area.
And at the end of the day, that leaves us with this one big question. In a world that feels more volatile and unpredictable every day, maybe stability is the most valuable asset of all. It's this powerful, often invisible economic force that's shaping everything from global finance right down to the price of a home on your street.